Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. My name is David Blain, your host for the show today. We thank you for joining us on 94.1 FM and Cable TV 10 in New Bern. Our phone number is 252-633-0107. If you have any comments or questions on the show, please feel free to give us a call. You can also send us an email. allthingsmoney@dlblain.com will get us a message, as well as visiting us on the web at www.dlblain.com. There you'll find information about myself, my firm, as well as archived copies of the show. You can go back in time and listen to the show and watch the show and get a feel for some of the things we've covered over the years. We try to cover information that is actionable for you, the individual investor out there in the community. We'll cover topics on the stock market, the bond market, taxes is one of my favorite topics, real estate, investing, all sorts of things. And so we love to hear from you, our viewers and listeners, about what you like to hear. Today I'm going to start off with a little article that I read in Investment News about the University of Texas. Gold has been a favorite topic of a lot of people. There are people, you can't turn on the radio or TV without somebody promoting you to purchase gold or sell your gold jewelry or something. It's certainly a hot topic, and this really struck me. The University of Texas is sitting on nearly $1 billion of gold bullion. They actually converted their paper holdings to physical gold bullion. They took delivery of 6,643 gold bars on April 15th. It's now stored in a warehouse in New York. And this is relevant for a couple reasons. Number one, it's just a massive amount of gold for a university to hold, and the reasons they have it are all the same. You know, the debasement of paper money, the feeling of security, the fact that it's going up and continues to go up. Maybe in a bubble, but for now at least it continues to go up. And they even took it one step further and wanted to get the physical gold instead of investing in paper. At my firm, we use the Spider ETF gold symbol GLD to get gold exposure to our clients. And there, people that own the gold ETF own an undivided interest in some gold stored in a vault in London. But there is still that you don't have the actual physical gold. There's no problem with that. We have complete confidence in that. But University of Texas people, they wanted the actual gold. Of course, you got to pay to store that. I mean, to store $1 billion worth of gold, 6,643 gold bars, the annual cost on that has got to be tremendous. And then if they ever want to sell it, to ship it and transaction fees and everything. So for the average individual, it's just not practical. Sure, a couple of Krugerrands in your safe deposit box, there's nothing wrong with that. But we prefer to get our clients gold exposure through ETFs. But anyway, that was in Investment News on April the 18th. The University of Texas sitting on nearly $1 billion in gold bullion. And actually, it brings up another topic, kind of finance, kind of social, but does let me see what their endowment fund is, $19.9 billion endowment fund, ranked only behind Harvard as of August. And so then the larger question becomes, does a university really need $20 billion in an endowment? And yet I'm not saying University of Texas per se, because I don't know that much about them, but typically all the universities, their costs are rising faster than the cost of inflation. They all cry poor mouth to the legislatures, when people want to raise the tuition and stuff. And is this really an effective use of funds to keep $20 billion in an endowment fund? Anyway, just something, I don't have the answer, just something to think about. Okay, the next thing I thought I'd talk about today, individual stocks, kind of a little background. When I first started investing, like many people, I started with a mutual fund. I put, my $100 a month into a mutual fund, and pretty soon that grew and grew. And as my portfolio got larger, I moved into individual securities, picking stocks. I was very good or lucky at it, depending on your perspective. I certainly don't suffer from overconfidence, and there is certainly an element of luck in it. As the years went by, the markets fundamentally changed over the years, and the days of purchasing, say, GE or GM or Coca-Cola and sticking it in your portfolio and holding it for generations, in my humble opinion, is over. The markets change too rapidly, products change too rapidly, consumer taste change too rapidly, and frankly, most people cannot endure the ups and downs of the market. And if you're wrong, then you've just wasted 20 or 30 years worth of investing. And so as the market changed, so did we, and we use mostly exchange-traded funds, or ETFs now, for various reasons. I don't want to get into today. We've covered that on other shows. What I want to focus on today is some of the reasons why today owning individual securities is really not a good idea. Now, this is not to say in the future it won't change. We see the correlation in the stock market, and correlation meaning if you have, say Coke and Exxon, and they both go up together the exact same amount and go down together, you have a perfect correlation, or a correlation of 1. If Coke goes up and Exxon always goes down, you would have a -1 correlation. If there's no relationship whatsoever between the two, you have no correlation. And so what we see is at different times in history, the markets have a different degree of correlation. And if you're picking individual stocks, the best time to do that is when there's low correlation among stocks. It means that if Exxon is going down and Coke is going up, and you're a skilled analyst, well, you could pick Coke and not own Exxon, and you could make out, very well. In times of high correlation, where everything moves together in tandem, there's really no benefit for the added risk of owning individual securities. And so in periods of high correlation, we typically don't recommend owning individual securities. Now, what I'm going to do is go through a couple of other reasons why I would be cautious on individual securities today for the individual investor out there. Well, we're coming up on our first break here, so we'll get into that when we come back from the break. We'll talk about some of the top reasons why you should not own individual securities. So for All Things Money, I'm David Blain, and we'll be right back after a short break.